Hi there, welcome to Kneppy Invest. In today's video, I'm going to be doing a technical and portfolio update. So we'll be looking at my three portfolios that I do have right now. We'll also have a look at the group portfolio update as well. Haven't looked at how that has been performing over the past few weeks. And then I'll turn my attention to a few companies I am currently following in terms of possible short-term to medium-term trades. Now, the first thing I want to do is have a look at how the four portfolios I'm following, how they are performing, and we'll all have a look at the group portfolio. These are companies that were selected by viewers of this channel about 2 years ago, and most of the companies in this particular portfolio were really long-term growth potential companies, not profitable, say for instance, Point Terra, our sitting group, Arctis. But a lot of those companies did fairly well, particularly Point Terra rose over 100% on Friday, the 28th of January. At this point in time, the group portfolio is down 16.36% per annum compared to the benchmark, which is up 5.82%. And the reason behind that is simply because most of the companies in this portfolio, again, are those story stocks and also some discretionary retail in there as well. Dusk Group, but Megaport has been doing really well. Kogan doing really well. Takeover bid for Tesseract. So a few of those companies have started to turn, started to move into uptrends. Email payments, Zipco still doing really badly. But anyway, and then we also have some of the big blue chips in this portfolio: BHP, Fortescue, Woolworths, Soul Pattinson, BlueScope Steel, and ResMed. And funnily enough, they're the best performing companies in this list. In fact, they're the only profitable companies. So go the big blue chips. CSL is down a little bit, 0 as well, A2 Milk. Anyway, so that's down 16.36%. But if we do go back into a raging bull market, I do expect a lot of these smaller cap companies will outperform those big companies. So it all depends on which way the market is heading. And most of the time, the market goes up. So not always, but most of the time the market goes up. Now onto my own personal portfolios. First we're going to look at is my long-term portfolio. These are companies I want to own for the long term. Now I am going to adjust some of the companies that I have included in this. I'm going to put them into my second portfolio, but most of the companies in this particular portfolio are companies I want to own for the long term. These are high quality companies. And to be honest with you, most of the companies in this particular list, I don't follow day to day. In fact, sometimes I don't follow week to week. I don't really care what the share price is doing on a daily, weekly basis. I only care what the share price is going to do over the next 5 to 10 years. And fortunately enough, this is almost, well, it's not quite double the market, but up 4.6% compared to the benchmark, up 2.9%. And for those who don't know, I also have started to really invest in overseas companies as well. So about 10 holdings in overseas companies, and they're performing quite well. Now, last time I did an update on this long-term portfolio, my currency gain was highly negative. Now it's positive. So it all depends how this portfolio performs. Also depends on the currency, the exchange rates between Australia and mostly United States. But I do have other companies that are listed on other non-United States exchanges. And in fact, only one company there. Now onto my two trading portfolios. Now, I've named my second portfolio trading. Now this, I'm going to subtly change this one because there's quite a few companies in this particular portfolio and it's up 7.5% compared to benchmark 2.9%. There's a few companies in here, in particular, the best performing companies, Doug Tech, IPD Group, and XRF Scientific. I'm not trading these. And the hope for these three companies is they can become good, high quality companies in the future. I have more hope in regards to IPD Group, potentially even XRF Scientific. But XRF Scientific and Doug are going to be more cyclical than IPD Group. So the way I'm going to subtly change the makeup of this portfolio is I want to include, say, medium to long-term trades in the hopes that some of these companies can eventually be transferred into my long-term portfolio. Some of the other companies I own in this are Catapult. SG Fleet is just a medium to long-term trade. Same with ServiceStream, Smart Group, Duratec is another one of those companies that potentially has a chance to become high quality in the future. Johns Lyng Group, I have thought about transferring that to my long-term portfolio. Select Harvest, definitely a medium-term trade. I don't want to own that company for the long term. And I actually have sold out of one position. Boss Energy, this was a medium-term trade and share price is going sideways. So I was hoping I could buy in at lower prices, and the share price has fallen since I bought in. So the performance of this portfolio is doing really well, and mainly because of those three companies I mentioned at the first part of this little segment. Doug, IPD Group, and XR Scientific are up pretty big since the start of the financial year. Now onto my short-term trading. This is just looking at 1 hourly charts, that sort of thing. So way more active in this portfolio, and in the hope that I can do really well in this, and then add some of the money I make in this portfolio, add to my long-term portfolio. That's the way I want to build up my long-term portfolio, is to make money on this or using this strategy. And at this point in time, it's doing really well, up 10.7% compared to the benchmark 2.87%. So we'll just say it's 4 times the benchmark. It's almost exactly 4 times the benchmark. And that's exactly what I want. In fact, my aim would be just to double the benchmark, but to be 4 times the benchmark right now is a good sign. And even though it's 4 times the benchmark, there are a few losing companies here. But I'm limiting those losses. In fact, I did sell out of email payments because it looked like it was heading down. And my loss in that company was only $136, and the share price has fallen significantly from them. Other companies that are in the red right now, A2 Milk, and I think that was a wrong trade. Share price of that company is just going sideways. I already own this company in my long-term portfolio, and maybe I should just sell out of that position. Bravura Solutions and Integrated Research, particularly Integrated Research, did release a positive announcement. Share price is going sideways, and the main reason it's going sideways instead of up is there is a seller. I think a fund manager is selling. We do see on occasion fairly big dumps, and those dumps mean the share price is unable to move higher. Bravura is just disappointed. They have a new CEO. It was the interim CEO, now is the new CEO. Share price of that company going sideways as well. By far the biggest winner in this portfolio is Nuix, and I have taken profits. So I sold out of Nuix. So I bought in Nuix, and I'll show you my trades in a second. So I bought in Nuix, and then I sold out when the share price increased over 30%, and the share price actually has increased since then. Share price now $1.51. Done really well with Kogan. That was not based off any announcement. Share price was just in an uptrend. That's up pretty big well. I've taken profits with Mesoblast and Electro Optics, but I've bought back in. Maybe that's a mistake or not. We'll wait and see. I bought in Megaport because of a really good announcement, and then they released a really good Appendix 4C, and that's up pretty big as well. And other companies doing really well. Tyro Payments, MRM, which is MMA Offshore, Downer going slowly upwards, and RPM Global may not be really suited to this portfolio. Maybe it should be my trading portfolio, because I do think that company has long-term potential. And I was thinking about that. Even if the share price goes down a little bit, I may not be willing to sell out that company just yet because of that long-term potential. But the main reason I bought into that company was a good announcement, and the share price looked like it was turning up. I forgot to mention there are 2 companies I did buy in the past week that I did not buy in or did not put in this particular portfolio. That's Visan and Frontier Digital. Put them into my trading portfolio, and I want to own those companies for the long term. Anyway, this is my hourly trades journal. So I have taken profits with 3 of my trades, and I've taken a small loss with EML payments, and you can just compare the wins versus the losses. And the whole point of this strategy is to sell your losses fairly, not quickly, but when they're only down a short bit, when the thesis of the whole reason why I bought into those companies has not really gone to fruition. And then when a company share price goes up a lot. So for instance, Mesoblast, I took profits in that company when the share price increased 28%. Electro Optics when the share price increased 26%, and Nuix when the share price increased 32%. Now with Electro Optics and Nuix, I might have sold a little bit too quickly because the share price kept on increasing after I sold out. But with Electro Optics, the share price has pulled back significantly. So I sold out of that company at $1.09, and the share price actually did pull back In fact, it kept on increasing to something like $1.30 and then pulled all the way back to $1 and then started to increase again. That's why I've taken a position again in Electro-Optics at $1.11. And the share price currently is $1.11. And Mesoblast is another example. In fact, I'll show you a chart of Mesoblast. Share price of that company just took off. I sold out $1.37. Share price right now is $1.15. And the reason I bought back into Mesoblast is simply because it does look like potentially the share price is right on a good support level. So other companies that I might be thinking of selling out, taking profits, include Kogan, which is up 25.5%, Megaport 22%. So they're both these companies are in my sell range. I would like to sell companies when they're in between 20 and 30% rise from when I bought. Tyro Payments up 13.4%. And MA Offshore up 6.8%. But I'm also willing to ride these companies that are going up a little bit longer. So Nuix was 32%. So I'm willing to sell when the share price has risen a little bit higher. But the thing I am mindful of is when the share price rises really quickly, you're eventually going to see a sell-off. And that's one of the reasons I did take profits with Nuix. And even though the share price has kept on rising, wouldn't be surprised to see a little bit of a correction in that company's share price. Now, on the loss side, the worst performing company in this list is currently Integrated Research, only down 4%. Other companies down. My new trade with Mesoblast is down 3.8%. Bravura only down 1.9%. So at this point in time, the strategy is working really well. So no reason to end this project, I suppose, because it's doing really well, as you can see by the very fact that it's up 10.7%. So let's have a look at some. Why not? We'll have a look at some of the reasons why I've sold out of some of these companies and bought back in. So let's have a look at Nuix. In fact, I don't have to do that. I can just go to I do have not a watch list. And I don't have Nuix anymore on this because I did sell out. So let's have a look at Nuix. And because I am using 1 hour, look at that beautiful daily chart. But you can see share price actually did get to these levels back in February, and the share price pulled all the way back. So I am mindful of that. But the reason why there's excitement in this company right now, really high volume coming through, is because of a really good announcement from the company. And look at this hourly chart. So I bought back in $1.08. So just after they released their positive announcement in this sort of area here, I think it might have been just here on, I can actually tell you exactly when I bought because I wrote it down. The 21st of July, let's have a look, 21st of July. So around about there, 10 a.m. Between 10 a.m. and 11 a.m. on the 21st of July, I bought in and the share price has taken off. Now, what's really interesting is when you look at the share price increase at the first hour trading on Thursday, share price rose 13.4% in the first hour, high volume, really big volume. So probably a fund manager got really excited and the share price hasn't dipped back. I was thinking, mate, that's when I sold. I was hoping the share price would dip back after that, but the share price has just gone very slowly upwards. Even yesterday, on the 28th of July, when there was a sell-off in the overall market, share price of Nuix kept on rising. So maybe I was a little bit too hasty in taking profits with Nuix, but I can't complain with a 32% rise in about a week, less than a week. 32% rise in less than a week. Now let's have a look at some of my other companies. Kogan looks pretty good. I've already talked about this company in my other video. So that's still an uptrend. Tyro Payments, it's in an uptrend, 1 hour uptrend. Beautiful looking chart. When you look at the daily chart, it looks a little bit different, not quite as bullish there, sort of like a V-shaped recovery. But 1 hour chart looks brilliant. Genus Plus is another company which I'm not sure if it does belong in this portfolio. Maybe it belongs in my other portfolio because I am bullish about this company, but it looks pretty good on the 1 hour chart. Downer, this is definitely not a company I'm going to own for the long term. This is just a trading. Has pulled back, but still in an uptrend. But I want to see the share price rally over the next few trading days. If I don't see the share price rally, this could be take the profits, even though it's only up, what is it? Only up 3.4%. I'm willing to take profits if my thesis is not playing out. And even though I'm not in my range where I want to take profits, 20 to 30% up. Megaport looks brilliant. Beautiful uptrend here. Integrated Research just going sideways. And I've told you that we keep seeing a little bit of dumps, particularly just after I released that announcement, 4 big dumps. And we continually see these big dumps. And the reason I know it's big dumps is in 1 hour, we see high selling, so there's spikes in volume when the share price has gone down. So there is a fund manager leaving or selling more, but the share price remains above 42 cents, which is my sell level. Only briefly did go below 42 cents. To milk, this probably was a mistake. It doesn't look very good at the moment, just going sideways. So I could deploy that money into another company. Collins Fur just bought this on a nice little update from the company. Not completely sold on this yet. And RUL, which is RPM Global. Again, I bought this company mostly because of a good announcement. Share price took off. We did see a little bit of retracement in share price, but share price is still going up. And MA Offshore, beautiful 1 hour chart. You can see they released that really good announcement on the 17th of July, and it took all week before the share price went above the first hour of trading. You see this a lot. Sometimes you are given time to take a position in a company. When it releases a good announcement like MMA Offshore, and the share price has taken off, it's increased from $1.25 up to $1.35. Mount Gibson, yeah, this is all. I'm not sure if I should be buying into commodity companies in this strategy, because it's highly dependent on the underlying commodity. And maybe I should be actually looking at the commodity chart and then buying companies that are bullish based off the commodity chart, if that makes sense. But Mount Gibson did release a really good announcement, and I think this company is really undervalued. So maybe, again, this company more belongs in my trading portfolio. So I'm more willing to hold on to this company. Revera, I was thinking this is cheap. Generally, if you look at the hourly chart, generally it is going up, but it's a very slow grind up. And Mesoblast, I'll show you why I bought Mesoblast. So this sloping line here is we'll say the short-term trend. It's up. Every time it hits this short-term, the share price hits the short-term trend, share price rebounds upwards. And I took a position because it hit that short-term uptrend. You can see it hit it on the Wednesday, and there was a nice candlestick then, but it's fallen through. So this could be a loss I might take if I don't see a rebound on Monday. And thankfully, the NASDAQ was up pretty big, up 2%, I believe. So hopefully, Mesoblast will go up. And again, a lot of selling coming in the last few days for Mesoblast. And electro-optics is highly volatile, lots of volatility here. So I sold about here. You see a massive rise in share price. I sold this little cluster. Share price kept on going up and then fell fairly quickly all the way down to 97.5 cents. I had a buy price at 95 cents. It did not quite hit that level and then rebounded up. And that's why I took a position again, smaller position, because of a nice little rebound. So I'm hoping we get another rebound moving forward over the next few weeks for electro-optics. Now on some companies I am following closely. First company, and I might not be following this company or as closely now. In fact, I'm going to look at Cobalt Blue. I did put a buy at 36.5 cents, right, which is right there. Share price had moved into an uptrend. It did not hit my buy price at 36.5 cents. It got to 37 cents. See this little dip here. I think as it started to rise again, I put 36.5 cents. It just missed it. And the share price took off, went all the way up to over 52 cents. So I thought, oh, damn it. It was over like a 2-day period. So I thought I'd missed my boat there. And then the share price started to pull back, and I dropped my bid, thankfully, because the share price did hit 36.5 cents and close at 36.5 cents. But the chart looks a little bit more bearish right now. And we might see a bit of a rebound in the price, but I'm not willing now to play Cobalt Blue. Again, it's a commodity company, just like Core Lithium. So I mentioned, I think in last week's video, the company did release a really negative, it was on Monday. So the company did release a negative forward outlook. Really good quality numbers, cash flow positive, that sort of thing. But their financial year 23 and financial year 24 guidance was below expectations. So share price really dove on the Monday. And I did think that there was a really strong support level at 72.5 cents. And I was thinking if the share price could open on the Tuesday at around about 73 cents, I would take a position. But the share price did not. In fact, in the first hour, massive volume came through. Share price, I think, opened at 69 cents, fell all the way down to 61 cents. And then we saw the share price bounce. And what did the share price get to on the bounce? 72.5 cents, the old support level. Now it's resistance. And then the share price, once it hit that new resistance level at 72.5 cents, has pulled back to 66 cents. So I probably will take Core Lithium off my potential trading list because it has fallen through that support level. Next one was Dropsuite. I think I did do a video on this company because the share price took a massive hit on their Appendix 4C, down 20.3% in the first hour, and this is the 19th of July, and then down a further 11.9% in the second hour. And the share price hit a really good support level at 25 cents, a nice bounce. In fact, the share price went from 25 cents back up to 31 cents. So nice little bounce off the support level. Technicals do work. Support, resistance levels do work. And then, unfortunately, even though it was a pretty good buy, and the share price, because of that big dip, I think the market was nervous, and then we started to see selling coming in, and the demand of shares completely dried up. So that's why the share price has just generally drifted down. It bounced again off 25 cents on the Tuesday, but there was not much bounce. Only went to 26.5 cents. And we have seen the share price fall through 25 cents, currently 23.5 cents. So it looks like potentially that long-term support level for Dropsuite has been broken. If you look at the daily chart, you can definitely see a lot of selling coming in the last week and a half. Share price has fallen from about 38 cents down to 23.5 cents. It has fallen through. That's a lot of volume, really high volume as well. So less bullish on Dropsuite. But again, I think there's long-term potential for that company. Mitchell Services is a company that released a positive update, but I'm a little bit nervous about this company because typically they disappoint the market. But it does look like, particularly if you look at the daily chart, the long-term downtrend has been broken. We go all the way back to 2019. Share price has been in this downtrend. And whenever the share price gets above this downtrend, it only stays above for a very brief period of time. We're talking about a few days. But the share price has pulled above that long-term downtrend on strength, on a pretty good announcement, some good volume coming through. So this could be a bit of a trading play. It was a good announcement as well. A dividend-paying company, performing much better than I think the market expected. Market cap of this company is about $80 million. Did I do a video on this? I can't remember. But that looks interesting. But I'm just really hesitant to take a position in this company because share price can be quite volatile, and continually this company just releases negative announcements, even though they just released a positive one. Appen looks, I'm still following Appen, and I do have a long-term position in this company, unfortunately. It was a trading position initially, but the main reason I started following this company again is a share price. So this little horizontal line here was a long-term support level. It fell through it on really some negative news, but bounced really hard back above it. And then share price in a downtrend since June. Share price fell through that level at $2.20 for a very brief period of time. We're talking about like 6 or 7 hours, and has rallied a little bit. I would be inclined to think the share price is going to keep on dropping from here. If the share price goes sideways from here, that might be good, but we really want to see a really good announcement from this company because the market is not, I'm going to say interested in this company. The market is skeptical that this company's management can turn things around. Another company that released a really good announcement during the week was Mosaic Brands. I had a look at their Appendix 4C, and based off the Appendix 4C, I'm a little less bullish. Now, the market, because the share price has been a downtrend, even though the share price, the market liked it initially, share price really struggled because a lot of extra demand or supply of shares coming on, and the share price has been quite volatile. So I'll probably stay clear of Mosaic Brands right now, just based off their Appendix 4C. Even though the market sort of liked it, I wasn't a big fan of it. A few retail discretionary companies that I do own a long-term position, Lovisa, but just based off the YLE chart, I would not be hesitant in taking a position in this company on trading, on the opening of trading on Monday, just to add to my position. Maybe not add to my position, but it's traded. And if the share price can go up say 20 to 30%, I will probably add to my long-term position when I take profits. So the way I do that is if I take, say, $5,000 worth of shares, share price goes up 20%, that's $1,000. Instead of taking $6,000, I take $5,000 and then put that $1,000 worth of Lovisa shares into my long-term portfolio. And if I keep doing that, I can build up my long-term portfolio just by trading, if that makes sense. The other company which I don't own a position in is Premer Investments. And the main reason I like this company is because of Spiegel and Peter Alexander. And I do think potentially there is some value to this company. So according to TradingView, P ratio of 12, dividend yield of 5.6. I think this is interesting. So this is another company I'm thinking maybe taking a trading position or even a long-term position. I do think this is a higher quality retail company on the ASX, and just based off the alley chart, looks really good. So, and the last one, no, I'm not going to look at that one. Now, a company I'm really thinking of taking a position in on Monday is Siteminder. It's not profitable, but they did talk about being profitable and cash flow positive in financial year 24. And I think that's one of the reasons why the market got excited. This company does have a fairly high market cap, about $1 billion, so it's not profitable. This company was mentioned in Aussie as the core like a week ago, and they don't know, whoever were the analysis, don't know anything about this company because they equated Siteminder with Webjet, Flight Centre. It's completely different. This company provides software services to hotels. They're not a booking company, that sort of thing. I don't think they are. I think they provide the services to the hotels themselves. I could be completely wrong. Now, one of the reasons I might be a little bit hesitant about taking a position in this company is because I own a company called Bayador Investments, and they actually spun out this company, Siteminder, as an IPO because they did have a fairly big position in Siteminder, and I still think they have a position in Siteminder. So I indirectly own Siteminder shares. But nice reaction from the market when they did release their Appendix 4C and possible breakout in the share price. And it's really good to see that in the 5 last hours of trading on the Friday after the initial rise, share price just went sideways, which tells me there's not a lot of selling in this company right now and really big volume coming through, which tells me, again, more than likely it's fund managers driving interest in this company. And you want the fund managers interested in a company. Now, a company I do have in my trading portfolio is SG Fleet. We also have Smart Group, but I'm just only going to show you SG Fleet. And this company share price has broken out. I think I'm going to call it right now. You can see the breakout, particularly if you look at the daily chart. So share price of this company was in this, I'm just going to put this up a little bit more. There it is. Had been a downtrend since early or sort of mid-May or mid-2021. And you can see why this is a downtrend. So every single time, and that downtrend is portrayed by this sloping dash line, and we can see the share price reach this downtrend once, twice in the past, and really struggled. So pretty strong, not the strongest downtrend. And then the share price went on a nice little rally during July, the last week or so. It hit the downtrend. And when it hit the downtrend, I went, ooh, should I take profits? And then the next day, it bounced. Share price opened above the downtrend, and then that's on the Tuesday. On the Tuesday, share price opened just above the downtrend line, and there was a fair bit of buying that day because the market did put the share price below the downtrend line. And then on the Wednesday, for some reason, a lot of interest came in. A really high volume came in on the day the share price broke above the downtrend. So I'm not sure what caused that interest. Maybe it was just one fund manager taking one big position. But then there's some nice volume coming in the next 3 trading days when the share price went further above the downtrend line. So this is a possible breakout for SG Fleet. This company is not expensive. P ratio of 12.2, a dividend yield 6.1%. And I think they have the potential to have some really nice growth for not only this financial year, the next few financial years. So SG Fleet, Symbio Holdings. Used to be called MyNet Phone. This is another potential breakout. The potential breakout happened on the Thursday. So what I wanted to see was this dash line broken, which was the hold highs we've seen. And it looks like it broke out on the Thursday, but then some selling came in and actually drove the share price all the way down to right on that support or resistance level. So it's going to be interesting to see what happens on Tuesday. We need to see the share price remain above $2.20. So I put that onto my watch list. And the last one, actually, I'm not going to show you Ansarada. The last one I'm going to show you, or last two, is some energy companies. Woodside looks interesting. Not only on the hourly chart, the daily chart's starting to look interesting, but there is a little bit of resistance above $38 for this company because the share price had reached or just above that level 3 times in the past. So right here, we'll put a little bit of a resistance line right there. You see, the last 2 times the share price really struggled to get above $38. I think I'm just going to show you Santos as well, because I've been following Santos, but not that closely. So the share price of this company could be breaking as well. So why are these share prices breaking out of these energy companies? Let's have a look at what the oil market is doing right now. So US oil is up 1 point. Well, that's why. Look at that. So this is what I'm thinking I should be doing when it comes to commodity plays. Instead of just looking at individual companies, look at the underlying commodity. And it does look like potentially that oil is breaking out. It's turned into a short-term uptrend. So this is why Woodside and Santos are starting to look more bullish. So if you have a look at gold, it's not really doing much. Copper, not really doing much. So I might go through the rest of the commodities just to see which one is looking okay. I did notice the gold companies had a massive down day the other day. So that must have been on the Friday because gold fell 1.3% that day and has rallied 0.7%. So an overreaction from the ASX when it comes to gold companies. And the Nasdaq up 1.85%. So we should have a nice day on the Monday on the ASX, particularly tech companies, because the Dow Jones only up 0.5%. And I think that's it for all the companies I want to focus on in today's video. If you have any questions about any companies I've looked at in today's video, or even any questions about my portfolios and my strategies, I'd love to hear it from you. So leave those in the comment section of this video. Otherwise, I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.